A raccoon is going to loan you 5.7 million bells. No credit check, no interest, no due date. He will never call you. He will never send a collections letter. He will just wait. Forever, if he has to. If a real bank offered you that deal, you'd assume it was a scam. In this game, it's just Tuesday. It's the very first thing that happens to you before you've even picked a haircut. This is Animal Crossing's home loan, and Tom Nook has been running this exact scheme for 26 years across 5 console generations, without ever once charging interest. That makes it one of the most unrealistic financial products in fiction. Not because the price is absurd, but because the terms are. Today, we're figuring out exactly what those terms would be worth if a real bank ever offered them, and the answer is stranger than free house. Here's how it actually works. When you show up on your island, you don't have a single bell to your name. So your very first bill isn't even paid in bells. It's 5,000 Nook miles, a separate currency you earn just by playing. Even Tom Nook knows better than to loan real money to someone with 0 assets and no income. Except, of course, that's exactly what happens next. From there, every time you want to upgrade your house, he hands you a bigger bill. Here's the full climb, stage by stage, in bells, 98,000. Then 198,000. Then 300 to 48,000. Then 500 to 48,000. Then 700 to 58,000. Then 1,200 to 48,000. And finally, to dig out that basement, 2,498,000. Add it up, and the full house, tent to mansion, costs 5,600,000 on 96,000 bells. That's before storage upgrades. 6 more optional expansions on top, running 500,000, then 700,000, 900,000, 1.2 million, 1.5 million, and 1.8 million bells, each paid up front. Nobody makes you buy those. People do it anyway. And Nook's been escalating for decades. In the very first Animal Crossing, the full loan topped out around 1.4 million bells. By Wild World, it was 3.6 million. New Leaf pushed past 7.6 million once you count every room. New Horizons only asks 5.7 million for the house itself. Though if you max out every storage expansion too, Nook will happily take you past 12 million bells total. Same raccoon, same 0%, every single game. So what's a bell actually worth? Fans have tried to pin this down for years, and the most cited method uses the coffee at the in-game cafe, the Roost. A cup runs you 200 bells, and a real cup of coffee runs about $5. Do that math across the whole loan, and you get roughly $142,000. For an entire house built from nothing in a A&AA Nintendo game, that's actually a very fair price. Tom Nook charges 0% interest. Not an intro rate, not a promo that expires. 0 forever. No due date either. You could never pay him back and nothing happens. No late fee, no credit score, no lawyers, because Nook doesn't have lawyers. Here's the part that shouldn't happen. Most players don't pay it off the second they can. They sit on debt they could clear in one visit, bells doing nothing in their pocket for weeks of real time. Turns out that's not an Animal Crossing thing. It's a people thing. Financial advisors see it constantly. Told to pick which debt to pay off first, most people knock out the smallest balance, even when a different debt is quietly charging them way more. It's called the debt snowball, and it works. Not because the math is better, but because clearing something feels good. Nook's loan breaks that instinct completely. No interest to escape, no small balance to chase for the win. Just bells sitting there, because take away the deadline and debt stops feeling like debt, even when clearing it costs you nothing. Here's what that 0% is actually worth. Take that same $142,000 and run it as a real mortgage. 30 years. Today's average rate of 6.55%. Monthly payment, about $905. Total paid back over 30 years, $300 to $25,700. And $183,000 of that is just interest. You'd pay more in interest than the house cost in the first place. So the raccoon the internet has spent 26 years calling a capitalist villain. He's the most generous lender that exists, game or otherwise. The evil capitalist raccoon bit is a joke. The math says he's running a charity. That's the entire reason interest exists. $1 today is worth more than $1 in 30 years because you could have invested it. Every real loan bills you for that gap. Nook's is the only one that doesn't. And there's a wrinkle that makes it even better than it looks. Prices rise over time. So even a 0% loan quietly costs the lender something, because the bells you hand back later are worth less in real terms than the bells you borrowed. Economists call that the real interest rate, what you're charged minus inflation. And on Nook's loan, that number goes negative. He's losing value every year you take to pay him back, and he's never once complained. Which is exactly why almost nobody in the game does the mathematically optimal move. Because the rate is 0, you're never actually in a rush to pay him back. Every bell you divert to the loan early is a bell that isn't earning anything elsewhere. It's the same debate real financial advisors have. Pay down a cheap loan early or invest the difference. Except Nook's rate isn't just low, it's 0. So there's no version of the math where paying him back faster wins. 0% APR deals exist in real life. Car dealerships run them constantly. But you're paying somewhere else. Whether that's needing perfect credit or giving up a cash rebate to get the free rate. Nook doesn't ask for either. Flip to credit cards, where the average rate is over 21%. Pay just the minimum, usually 2% of the balance, and on a big enough balance, the interest each month basically equals your payment. The balance doesn't move, which is exactly why your statement now has to spell out how many years the minimum payment will actually take. The closest modern equivalent to Nook's pitch isn't a mortgage. It's buy now, pay later apps like Klarna or Affirm. Same promise, no interest, split into 4 payments, feels free. The difference is, what happens if you miss one? Late fees stack fast, and it's exactly the kind of debt that doesn't feel like debt at checkout, which is precisely why people spend more when it's offered. Nook's version keeps the marketing and skips the trap. The US government even ran this exact experiment. Federal student loan interest sat at 0 for over 3 years during the pandemic. Anyone who kept paying anyway knocked out pure principal, interest-free. Anyone who assumed 0% meant ignore it woke up to interest accruing again the moment the freeze ended. Same rule as Nook's loan. Free doesn't mean forever, and it definitely doesn't mean don't bother. So next time someone calls Tom Nook a capitalist mastermind, remember what he actually did. He built you a house, undercharged you for it, attached 0 interest forever, and let inflation eat his own returns instead of yours. Never once, in 26 years, did he ask for it back. The real villain in this story was never the raccoon. It's every bank that isn't him.